Suppose the government created money that expires if you don't use it. This is the reality of the digital yuan in China, and Americans are understandably skeptical about it. President Biden has ordered a study to explore the creation of a digital currency by the U.S. Central Bank. The Federal Reserve will launch a centralized digital currency system in July, effectively transforming the U.S. dollar. This has sparked interest online as it signifies the replacement of the U.S. dollar with a central bank digital currency. Globally, numerous countries are also exploring CBDCs, with 90% of central banks reportedly investigating them. By 2030, an estimated $5 trillion digital dollars could be in circulation worldwide. However, there's a problem. Most Americans don't trust the government to handle this transition. Back in the 1950s, during a time of economic growth and higher wages, a survey showed that 77% of Americans trusted the U.S. government to act in their best interest. But over time, that trust has eroded, and today, only 1 out of 5 Americans still trusts the government. This lack of trust is also why people prefer using other forms of money, like cash and cryptocurrencies. Despite the public's concerns, the government is moving forward with its plans for a CBDC, and this will have significant implications for privacy, freedom, and even Bitcoin. So in this video, we will explore what exactly a CBDC is, how it might work, and how it will impact us. While the Fed's payment system and CBDCs are quite related, they are not similar at all. The new payment system is a completely fresh, faster, and better system than traditional banking. It allows businesses and individuals to make instant payments 24/7 because funds settle between banks in real time, taking only seconds. Here are a couple of examples to help understand how this system will be used in practice. Imagine you own a coffee shop and urgently need a delivery of coffee beans. Once you receive a payment request from your supplier, you would pay through a participating bank, like your credit union. The coffee bean supplier would instantly receive your payment. On the back end, your credit union would send a digital form called ISO 20022 to the FedNow service for validation. The service would then send a message to the coffee bean supplier's bank, which would confirm in real time that it can receive the payment. The FedNow service would debit and credit the money and send a message to both banks confirming the completion of the settlement. This entire process, which may sound complicated, happens almost instantly. In comparison, the current system takes more time and money for banks to process. Eventually, this service will also be used for bill payments and transferring money between accounts. For example, it will be helpful if you have a utility bill due on the same day and want to avoid late penalty fees. In the future, the Fed aims to enable peer-to-peer transactions, allowing us to send money to each other just like we use Venmo or Apple Pay. Initially, this service will only be available for people within the United States, so instant money transfers overseas won't be possible. The rollout of this system will happen in phases, starting in July. Participants are already receiving formal certifications in the first week of April. This is the FedNow payment system, which is connected to the CBDC, the central bank digital currency. Central bank digital currencies are being created all around the world. 11 countries have already launched their own digital currencies, such as the Bahamas with their sand dollar, Jamaica, and Nigeria. 18 countries are currently testing, while 32 countries are in the development phase. 39 countries are still researching and figuring it all out. Only 15 countries are inactive, and 2 have canceled their plans. In total, 114 countries representing 95% of the world's GDP are involved in some way in this process, including the U.S. Now, let's think about why the Federal Reserve is so interested in digitizing dollars, especially when we already have digital money on our phones. The answer lies in the difference between what we currently have and true digital currency. Right now, our monetary system relies heavily on digital records of money. When we use banks or apps like Zelle, Venmo, and Apple Pay, we're actually sending digital IOUs and claims to money, but not the actual money itself. That's why banks need to use other banks to verify transactions and ensure the money exists. True digital currency would mean directly transferring value from one person to another without involving multiple banks. This might sound similar to what cryptocurrencies are trying to achieve, but there are some significant differences. Central bank digital currencies are controlled by the government through a private network, so they're not decentralized. This gives the government complete control over the supply of money and how quickly it moves from one place to another. This has both advantages and disadvantages. There are many opinions on this topic, and I'll share mine later in the video if you're interested. But if the government creates its own CBDC, it would allow them to do certain things, both good and not so good. Having a central bank digital currency would give the Federal Reserve direct control over the money supply, which can be a positive thing. They already have this control through a process called quantitative easing. We saw this during the pandemic when they injected money into the economy by buying mortgage-backed securities and treasury bonds. They can also reduce the money supply through quantitative tightening, which involves selling off assets. They are currently doing this, except for the failed bank bailouts. The point is, our financial system is complex, and it can be compared to a Rube Goldberg machine if you're familiar with that. So think of this new CBDC system as a simplified version of our financial system. If I suddenly disappear, it's not magic. Another advantage is speed. With programmable money, the value of the dollar could stabilize, and it would modernize banks. Sending money and government stimulus would be faster, and it could potentially lower banking costs. Banks would have to compete with the Federal Reserve to make transfers and even ATM machines cheaper. A CBDC could also help with tax revenues because most people wouldn't need to file taxes. Instead, the government would already know how much money we've made, and they would send us a bill to pay. So it seems like there are many benefits, but there are also downsides and risks. Some people view central bank digital currencies as a way for the government to monitor and control its citizens. We have seen this happen in other countries, and CBDCs have been called Big Brother's digital dollar. It's understandable why people are skeptical because CBDCs would be linked to our unique digital IDs, which could be used to monitor and control our actions. It sounds like something out of a Black Mirror episode. If the government wanted to, they could freeze our assets, and with simple action, our bank accounts could show a balance of zero. This level of control would be possible with a CBDC. Additionally, if they didn't approve of our spending habits, they could set an expiration date for the money, similar to what China did to encourage spending. If all of this sounds like a conspiracy theory, remember that any government has the potential to abuse power, including the U.S. As evidence, we can look at history. On April 5, 1933, Franklin D. Roosevelt issued a decree requiring U.S. citizens to give up their gold within a month. This included coins, bullion, and certificates. Everything was confiscated and had to be returned to the Federal Reserve. What's even more shocking is that those who didn't comply could face up to 10 years in prison and fines of up to $10,000 per year. To put this into perspective, in 1933, $10,000 represented over 3 times the average annual income of an individual. Imagine if the government suddenly told us that we had to hand over all our money or face hefty fines. It might sound far-fetched, but history has taught us that governments can sometimes misuse their power. To understand this better, let's look at a more recent example. From 2010 to 2012, the IRS unfairly targeted conservatives and later apologized for it. This happened because those in power had their own agenda and the means to enforce it. So, we need to ask ourselves if taking such a risk is worth it. Even though it's 2023, it feels a lot like 1984. That might be an old reference, but you get the idea, right? If anything, this is about global commerce. The Federal Reserve wants to combine the government's expertise in managing currency with the innovation of the private banking sector. By doing so, they hope to create a new financial product that keeps the U.S. ahead on the world stage. The side effect of this is greater control. However, it's not like the government lacks tools already. They have plenty. Yet, despite opposition, central bank digital currencies seem inevitable, as other countries are launching their own. the US wouldn't want to be left behind. Even the World Economic Forum warns that if central banks don't innovate, they'll lose the idea of money, trust, and control. So, do you believe that CBDCs have the potential to reshape our financial systems, fostering greater efficiency and inclusion? Or do you harbor concerns about privacy and control in a fully digital monetary world? Share your thoughts in the comments below. If you found this video informative and thought-provoking, don't forget to like and subscribe to our channel for more insightful content on the latest developments in the financial industry.